I think the risk reward proposition for Bitcoin in the year 2024 is better than any other time in the history of the asset because you have institutional adoption, you have regulatory clarity, you see capital coming into the space, and yet still you can do the survey yourself. Ask 100 of your friends if they're fully invested in Bitcoin and if they understand it. And if 95 say no, right, I would say do your own research. But Bitcoin's 15 years old. So let's look at other great investments. 15 years after Manhattan was founded, was it a good investment? We could start 200 years after Manhattan was founded. In 1776, roll the clock forward, 1791. Was it a good investment? And was real estate in Manhattan in 1791 a good investment? Was it a good investment in 1865 after the Civil War? Was it a good investment in 1970? Was it a good investment 15 years afterwards in, 1995? Was it a good investment in London 20 years ago? 2,000 years after the Romans showed up in London, was it a good investment to buy London property? Right? I mean, these are scarce, desirable properties, right? It's 15 years late is not late, right? The difference between the winners and the losers is the winners buy something valuable and the losers are afraid, right? The losers are afraid to buy the valuable thing because it's too expensive. New York real estate was the most expensive real estate in the United States 300 years late, right? It's always been the most expensive. Apple Computer was founded, I think, 1976, around then. 15 years after Apple Computer was founded, was it a good investment, right? Check the price of Apple stock in 1993 or 1996. I think in 1998, Michael Dell told the board they should shut it down, give the money back to the shareholders. But the truth is, at many, many points in time, it was a good investment. I think, as I'd said, the real key is to understand what is Bitcoin's use case. It's digital capital. Well, how big is that? $400 trillion? Right? How much capital is locked up in real estate, equity, currency, bonds, collectibles, trophy assets, precious metals in the year 2024? Right? There's probably half the value of most residential real estate is the monetary premium. It's the capital. So, how do you know this? I give you a little test. Go to Miami Beach, go up and down the beach, and then count the number of lights on in a condo building on the beach. Or go to Monaco and count the number of lights on. And what you'll find is that 80 to 90% of all of the condos don't have lights on at night. So people have huge amounts of capital tied up in these idle assets. And there's a lot of reasons for them, but one reason is because they feel like their money is safer there. So in the 20th century, people basically bought sports teams. Ask yourself, what do rich people own when they get rich? They bought sports teams, they bought real estate, they bought companies, they bought land, they bought timber rights, they bought oil rights, they bought gold, they bought, bonds. They just bought stuff. Why? Because they knew if they left their money in the bank, it was going to dwindle away. Buy anything. They buy Picassos, they buy art, right? They buy stuff. So there was never a perfect digital capital. There was never a digital instrument where I could, if you were a rich Russian and you had a choice between buying a bunch of real estate in Moscow or buying Bitcoin, well, with ex post facto hindsight, looking back for the last 30 years. Okay, now let's play that out. And you're a rich Nigerian. Now you're a rich, Turk. Now you're rich in Lebanon, right? And we don't have to be rich. You can, anybody with any amount of money anywhere in the world, right? You've got the last 100 years of history. You live in Germany in 1930. What do you want, a building or Bitcoin? You live in Argentina. What do you want? You want to own land? You want to own a building? You want a company? You want Bitcoin? The currency is going to collapse 5 times in 140 years. 5 times, right? Okay, so this is why we want to study history. If you study history, you're going to find that the currency collapsed thousands of times. In fact, on average, it collapses everywhere. Probably it collapses everywhere on average every 50 years in the history of the world. And that's maybe me being charitable. So is it too late? Well, can you actually take all of your property, put it in your pocket, and leave the country on one day notice if you need to? If not, then you're probably not too late, right? So if you go through that exercise, you can't take your building with you. You can't take your bars of gold with you. You can't take your stock shares with you. People for a while, they bought paintings thinking I'll roll them up, but, it might not be the easy to, and the average person can't buy Picassos. They're not quite exactly at the price point. How do you buy $237 a Picasso a week, right? So Bitcoin represents digital property. What's the value of digital property? Hundreds of trillions of dollars. Is it overvalued? Not yet. It's $1 trillion right now. So when it's 100 times more valuable than it is right now, will it be overvalued? Not likely. It's probably still going to be appreciating faster than every other thing you can buy. Why? Because it's better than every other thing you can buy. Show me a hotel you can put in your pocket and teleport, right? $1 billion of gold is like 3,000 pounds, right? How are you going to move that, right? Right? Give me a company that's going to last through the next 3 CEOs, right? Do you know who the 3rd CEO will be after the one that runs the company now? And do you trust that person? Right? The S&P 500, haven't we established there's a 99% failure rate? These are the winners. There's a 99% failure rate to generate shareholder value amongst the 500 best companies in the world. Now, if there's a 99% failure rate amongst the 500 best companies in the world, then what's the failure rate amongst the 100 million companies in the world? And, what's the most successful nation-state currency in the history of the world? Well, if it's the dollar's lost 99.8% of its value in 100 years. Maybe 99.9% of its value. You could debate whether it's 99.8 or 99.9% of its value. Every other currency in every other country lost 100%. So if you're sitting around wondering, is Bitcoin overvalued? The question is overvalued versus what? Right? You're going to buy something, right? You're owning something in lieu of Bitcoin. What is that something which is better? Right? That's the real question. Because not selling is buying, but not buying is selling, right? And you've basically got a certain amount of economic energy. It's deployed somewhere, right? And the question is, what are you invested in that you think is better? And I think everybody's got to answer that question themselves. But, like if you owned a football team, like what's the odds that people are just still going to watch football in 250 years? And what's the odds that you can put the football team in your pocket and leave the country? Not high, right? I mean, and what's the odds that, you get attacked by, what if there's some law that says that you're liable for the physical damage and the emotional harm to the football players? And, if someone gets hurt playing football, you have to pay $100 million settlement, right? That happens. Or even better would be, what happens if someone goes to a football game, watches it, and is traumatized by all the violence, and they form a class action lawsuit and they sue you? Mightn't that happen? Happens all the time. Right? Look at the history of opioids. Look at the history of cigarettes. Look at what's going on right now at congressional hearings around social media. At some point, you'll have trial attorneys suing tech companies because someone used a website and something bad happened to them, right? So there are a lot of risks no matter what you invest in. If you think you don't have risk, you're simply ignorant of the risks you're currently embracing. And I think that once someone understands fully all their range of risk, then your conclusion is, no, it's not too late to buy Bitcoin.
Amazing, amazing. And right at the beginning there, you said in 2024, you don't think Bitcoin has ever represented a better risk to reward ratio. Looking out in 2024, like it seems like we have this insane confluence of factors. ETFs launched at the beginning of the year. In April, we have the halving. Correct me if I'm wrong, we have the FASB accounting rules go into effect this year. Then we have the election in November, so it normally means more liquidity. What is your general outlook for 2024? Do you think this is just going to be a complete watershed year for Bitcoin because of this confluence of all these things coming together?
I think this is going to be a good year for Bitcoin. I think we started out the year with the ETF approval, and that was a big milestone. I think that the success of the ETFs is another milestone. I think that the halving in April will be a third positive milestone. I think those three things are going to drive momentum, and I think all the marketing wars between the Wall Street firms is going to be positive, and I think the assets being normalized throughout the mainstream investment community, and so I think it'll just keep generating momentum from here. I think it's also worthwhile, I think, to make one point. I think that we're living through the Bitcoin gold rush era. And I think the Bitcoin gold rush era started January 2024. And I think it runs until around November 2034. So it's about 10 years. And I'll tell you why. Because 93.5% or so of the Bitcoin was mined at the beginning of this period. But in November of 2034, 99% of all the Bitcoin that will ever be issued will have been issued. And so that halving is very symbolic. People talk about Bitcoin, issuance coming out over the next 100 years, all the way till 2140. But the truth of the matter is, the last 100 years, you're only getting 1%. So think, and actually, of that 1%, 90 basis points of it is coming in the 12 years that follow 2034, and then it's 10 basis points, 1/10%. But practically speaking, all of the block rewards are de minimis starting in 2034. It's 1% over 100 years may as well be nothing, because the daily volatility and the daily trading volume is going to render that to be somewhere between third order, fourth order, fifth order of magnitude. So that being the case, really, this 10 years is your best chance to get Bitcoin, right? This is the gold rush, because this is the period where there's still a lot of FUD. There's still a lot of uncertainty. People still aren't sure. They don't understand digital energy. They don't understand digital capital. They don't understand digital property. There's a lot of debate in the community. Is Bitcoin a currency, or is it a property? Or, there's massive debate. And a lot of people say, well, it's a currency, and since it's not legal tender, or because it doesn't move fast enough, or I can't buy coffee with it, it's not a good currency. So there's a lot of confusion in the crypto community. There's a lot of mainstream regulators. They think it's currency. So you see bankers say, oh, it's a currency, but it's not a good currency because I can't buy coffee with it. I can't buy things online with it, and it's too volatile. And they think that's a criticism. And so they criticize it. And then people that think that they know what they're talking about, they hear some famous person say, well, Bitcoin is not a good currency, and or the government will ban it, or it's not as good as the dollar or something. And so they get afraid. And they say, well, then I trust that guy, so I'm not going to buy it. So a lot of people are criticizing it for the wrong reason. A lot of people misunderstand it, and that creates lots of chaos, misinformation, stupid, misleading stories in mainstream media. It creates like bad takes on Twitter. It creates all sorts of confusion amongst Wall Street analysts. And so all of that fear, uncertainty, and doubt, and just basic confusion, and then misunderstanding, that causes a slow growth in demand, right? Like, demand is growing, but imagine how much faster it would be growing if everybody had spent 100 hours, right? Right? The people that criticize it, there's no way Warren Buffett spent 100 hours studying Bitcoin, right? There's no there's not likely that everyone that criticizes it spent 100 hours studying it. They haven't read the Bitcoin Standard. They probably haven't listened to 20, 30, 40 hours of podcasts, right? So the critics are misinformed, and the mainstream investors, they have all the money, right? There's $900 trillion of wealth out there. There's only 1 trillion in Bitcoin. So 99.9% of the money, of the wealth, is not invested, right, in the asset class. So a lot of people that don't understand what this is have a lot of money, and yet we've got a 10-year period when there's going to be an explosive increase in education, right? As Bitcoin's going to go up, and as the price goes up, more people are going to get asked, and they're going to like reject. They're like, stop asking me. I hate talking about this. Like, we don't like it because it's like gold. It doesn't generate cash flows, or they don't understand. If you don't understand perfect money, right? What's wrong with gold? Gold has emissions. Gold is inflationary. That's why it doesn't work. If you don't understand that, then you don't understand why digital gold is better than gold. So you don't understand Bitcoin. You don't understand money. And then you haven't really thought very deeply about property theory or capital theory. So you definitely don't understand digital capital, which means you don't understand digital energy, which means that when someone asks you, you're going to buy it, your answer is, of course, I'm not going to buy it. I don't get it. But what I say to people, right, like, if everybody read all these books, if they listened to all your podcasts, if they listened to all my podcasts, if they thought about it for a few hundred hours, tomorrow they would wake up, they would all buy Bitcoin, and Bitcoin would be $5 million a coin. And then we'd be doing this podcast, and you would say, Mike, all the comments from all my followers are, is it too late? And I would say, well, it's too late for you to get insanely rich. You're not going to get 100x, right? If you buy Bitcoin at 50,000 when it's 5 million, you're going to be bragging to your kids that you got 100x your return, right? So it's going to be too late for that. But it's not too late to buy it, because it's still better to buy the thermodynamically sound digital asset, which doesn't have all of the liabilities of real estate, stocks, or bonds. It's still going to go up in value faster than the S&P index. It's still going to be a better after-tax return than owning sovereign debt. It's still going to be better than owning physical property subject to acts of God, force majeure, and all the other physical limitations. So it's still going to be the best investment. It's just not going to be the investment that got you the 100x return that you were going to brag about. And so there's no reason to worry, right? Or fret. You don't want people to figure this out, right? Like if they figure it out, you have 10 years during which you can work and you can buy Bitcoin while everybody else disagrees with you and doesn't understand it because they're intellectually lazy or they're a different generation, right? So that it's like me saying it's 1905 and in 15 years, everybody's going to have an automobile. And now okay, well, you have 15 years to get rich in the automobile business. Figure out, are you going to set up the dealership in New York City? Are you going to start a company? Are you going to be a salesperson? What are you going to do? You have 15 years. Figure it out. This is better than that. But this is a 10-15-year head start. I had this analogy, it's like you could be working at a McDonald's, you could be working for $10 an hour, right? But if you're sweeping the $10 an hour in an asset that goes up by a factor of 100, you're getting paid $1,000 an hour. Okay, so how long do you want to work at $1,000 an hour? Well, you want to work at $1,000 an hour as long as you possibly can, because once people figure it out, then you go back to your $10 an hour job, right? So we're in the gold rush period. People are, when they think about it, they're going to realize this is the period during which everybody in the world started to realize Bitcoin is digital capital, and there's a digital transformation of money, and that you want to hop on top of that. You want to exploit that, And there's 1,000 ways to do it. Maybe it's just work really hard at your job and buy Bitcoin. Maybe it's start a company. Maybe it's do something different. You decide, right? But I don't ever regret any stacking I did. I mean, we bought Bitcoin, below 10,000. We bought Bitcoin probably above 60,000. I mean, at the end of the day, we never know when the world wakes up, gets rational, and then it runs through the all-time high, and then we regret not having bought more. I would encourage anybody that thinks maybe I'm too late. I mean, I think I would say, well, maybe you just haven't studied this enough, right? You don't give me your money if you're not confident. Give me your time, and if you don't want to invest the time, maybe you don't care about money that much. It must not matter to you that much. If it matters to you, then you spend enough time to figure out whether I'm right or whether I'm wrong. And there's plenty of information out there for you to come to your own conclusion.
Amazing. And just finally, I want to be